I'm Nancy and welcome to my car. Today is a little bit more casual for me today because I'm not meeting with clients. That brings up an interesting thought of why do I need to even explain that? Just being comfortable in my own skin. I just think that we're so used to having to look our best, and with social media influence that we always have to be made up and ready to go. But realistically, I pick and choose the days that I, look good or better. I still think I look pretty good without makeup. So just a pat on the back for myself there. Anyways, I was thinking about talking about the difference in mortgage partners or mortgage lenders. Our usual first choices, or what comes to our head first, is going to our bank. And banks and institutions are a very reliable source for information and loan officers, but keep in mind they're not the same. Mortgage lending banking is separate from your regular banking. So even if you have a relationship for your checking, savings, mutual funds, it doesn't mean you have a relationship with their mortgage banking. So you still go through the same application process anywhere you go. So that's the first thing. The application is similar for all types of lenders. Now the second type are mortgage banks, and these are the ones that specifically specialize only in mortgage. That's the only type of banking they do. And the third type are mortgage brokers, and those are the ones that has a portfolio of lenders, banks, that they would take your application and send it to them to see which is the best rate and terms they can get for you based on your financial profile. Now, which one do you choose? Realistically, you would choose not just based on how big the brand is by your financial situation. If you have a perfect credit score, lots of down payment, and you're what they call a grade A borrower, you can get a loan anywhere. And that's what we tried to aim for. A lot of the information on the internet tells you that, to basically bring up your profile so that everywhere will accept you, so you would get the best options. And that's what the institutional banks looks for, is grade A borrowers, and that's how they would look at you. And they also have something called overlays, and those are their own set of rules on top of what the federal rules are in helping you getting a loan. So it's multiple sets of qualifiers. Mortgage banks has those too. Sometimes they're a little lighter on that, and mortgage brokers will have just the federal guidelines. Most of the time, depends again which lender they put you with. So at the end of all of this information, you would, depending on your credit score, on your income status, and where you are at, you may get a better chance with a mortgage broker, say if you are just coming out of a bankruptcy, or you're finally fixing something that needed to be corrected in your credit report, versus if you've had, I would say, at least 3 years of great credit, great history, then you can go anywhere. So it depends on where you are at on your financial profile, and that needs to be explored. So long explanation, but at least now you know the difference between different types of lender. And if you want, you can always talk to me first, and I can help you determine which loan officer you are more likely to not get a rejection from. And that's the goal, is to get an approval. So hopefully that helps. I'll talk to you guys next time. Bye.